Hey all, welcome to ShareTrek. This is Raj here. Friends, yesterday the Nasdaq ended 1% lower as a result of a multitude of factors. Some we already forecast as catalyst and some that we did not anticipate. Today I want to talk about that. Let's get started. Welcome back, friends. We anticipated that the scheduled speech by Neil Kashkari would move the markets. We also anticipated that the retail sales will push the market down if it came in stronger than expected. Both these predictions came true today, and they pushed the Nasdaq down 1% by close of trading hours. Other things that also had a part in the sluggish performance of the market was weaker Chinese economy. There is news about weaker Chinese economy, and as a result, the market had a bit of an overhang. It got a triple whammy. However, I correlate the sluggish Chinese economy to lower oil prices, and hence I think that it is benevolent to the inflation perspective. And also, if China is having a sluggish economy, it could also mean that the demand for goods has reduced. That could be a precursor to lower inflation. I may or may not be right on the second part, but that's what I am thinking right now. The speech by Neil Kashkari seemed to highlight how the Fed will have to prepare the regional banks for future rate hikes so that they do not go the SVB way. So friends, the main problem with higher interest rate is that the government also has to pay interest. So it's a bigger bill for the government. And the second problem is that the safest place to park money is in treasury bills and US bonds. And if the interest rate go up after you buy a bond, then your bond prices are going to go down because the yield has got to increase in order to compensate for a higher interest rate. And that's the reason why SVB lost a lot of value. It did not realize it had accrued it, but the fact that it had accrued a lot of loss on its bonds made some of the depositors wary, and they all wanted their cash in at once, and that's the reason why SVB went down. If not, SVB would have lasted longer, but there was a run on the bank, in my opinion, and they had to sell and realize all the accrued losses, and that's why they had a problem. But what Neil Kashkari is saying is that we have to make sure that other regional banks do not suffer a similar fate. So they would require them to have more money, which means that they are going to lend less. So in a way, I think it's a good thing because less money being lent means less inflationary pressures from the demand side. So if you are controlling the demand side and the supply remains constant, you're definitely going to get rid of inflation. So that's my thinking process. And I think it's a good thing what Neil Kashkari said, but at the same time, the very fact of regional banks going down combined with the new news that Fitch had said that they might downgrade US banks, big US banks. Now, all that put together, it kind of put a gloom in the market, and that was reflected in the performance today. A bullish outlook for Nvidia, saying it was undervalued by 20%, sent the share price spiraling upward the day before, but yesterday it opened higher than it closed, and it just gained 0.43% over and above the 7% gain it had the day before. The sluggishness from the bearish catalysts seemed to have put a damper on Nvidia stock price. However, Nvidia reports on 23rd of August 2023, and we'll have to see what they report at that time and whether it's really worth that 20% extra valuation, because I thought Nvidia was already highly valued. That's why I sold it quite a while ago, and I regret having sold it because it went up almost 50% after I sold it. So I think, I'm very curious to see what Nvidia is going to report. And in the genomics front, I was happy to see Bluebird gain 4.62%. In fact, it was the highest gainer in our entire watch list of genomic stocks. And the other thing that made me happy was that CRISPR arrested its fall and gained 0.54%. So that was a little bit of a relief out there. And we also saw Illumina manage to avoid going negative, while Editas was the only other stock in our watch list to be green, and it gained 1.04%. So apart from this, the rest of our entire watch list, genomic watch list, was in the red. Our index moving stocks were also entirely in the red. All of them were in the red. So these are the times when it is extremely difficult to see what's going to happen next. And we as retail investors don't have all the information. And even if we knew exactly what is happening, it's important for the rest of the market to realize and behave the same way, or else we are not going to get any gains. The market may move in a different direction. And by the time they come to our point of view, we may have moved elsewhere and lose an opportunity. So that's how the being in sync with the market is very, very difficult, because there are different players looking at different news articles and different opinions. So the aggregate of that is what manifests in the market. And for us to be in sync with the aggregate is a very, very big challenge. So apart from the technicals and the fundamentals, we have to keep this third factor also in mind. With that, my friends, I think I would like to bring this video to an end. And before I go, I would like to request you guys to check out www.sharetech.com, and I have started a genomics blog as well. I think there are 2 or 3 blog posts out there for genomics. Please make it a point to check it out and give me some feedback on the website so that I can improve it. And also we are on Threads. You could join us on Threads. And yeah, so I'd like to bring this video to an end. Catch up with you again soon. Bye for now.